Good day traders, this is the FX Big Dog and welcome to this week's market update. If you have any questions about this review, please email me at analysis@infinitumfx.com. Or if you prefer to do a one-on-one private chat, you can go to our website and click onto the online support links. Important disclaimer, trading the forex market is risky and only intended for investors that understand and can afford the risk. Note that the video presentation is for educational purposes only and not offering trade recommendations. If you choose to follow a trade presented in this video, you can do so at your own risk. We understand that all traders have a full understanding of the risk and are responsible traders. Do not trade live accounts unless you have traded a successful strategy on a demo account for a good period of time. Alright traders, let's get to the currencies. And what we have here is the Great British Pound 240 time frame. Looking at the charts, we see that the market has shown us a bull crown setup, but look how the market's pulled back deeper than we expected the left tip to be. Left tip was at 61.65, and you can see it's pulled back all the way down here to 58.50. Now, this means we're in a low probability crown. Even though we were in up AB boundary, it is showing low probability crown, and this is probably because of the bear flag pattern that was developed over those last couple of months. And you can see here it is. Yeah, it comes off the high right here at 68.85, 68.85, and all the way down here to 58.30. Now that set up the bear flag pattern. And of course it looks like it's driving the market down to the objection point of this pattern. Now looking at what the opportunities are on the pound right now, well, the intermediate traders, perhaps you stand aside right now, but of course those short-term traders will certainly be bearish on this downward movement. Now you'll be taking advantage of the pullbacks and looking for the old support become resistance, and to sell off resistance in this downward trend. If it gets back inside this consolidation that it broke out of previously, perhaps then we are on our way back up again, and we can start looking for breaking points of resistance at this area right here at 62.65, and of course up here at 64.56. That is the pound. Let's go take a quick look at the euro. The euro 240 is looking bearish. We're in down AB swings. We can see the market has started a pullback on the next swing. We'll be looking for old support become resistance to sell off resistance. And at the moment now, as you can see, that this downward trend line has been tested as well. So perhaps we're not going to be able to reach even the 380 bounds, as the market's finding the resistance off this downward trend line and these old lows right here. There it is. There you get some support coming there that's acting as resistance, whereas the market is trading right now. So that's the situation with the euro. Euro is bearish overall, looking like it's in retracement right now, and traders will be looking for opportunities to sell off resistance. Now we're going to go off to the 240 Swiss franc. 240 Swiss franc is bullish. You can see we're also in retracement of this bullish upswing. The market is pulling back to the around about the 382 pounds, but notice just short of the 382 pounds we have these highs right here. That's also going to be holding the market to continue its further move down south. Now, if we get a bounce off those support areas, which is these old highs, then of course we'll be chasing after the objection point here at 1.0814. We'll have to wait and see what happens and what develops in the next couple of days as the week develops with regards to the trending of the swing. But let's go ahead and take a look at the Canadian dollar. Here we have a Canadian dollar, and it's very interesting. Notice how we've got this down AB swing. The market came off as far, it came as far off as the 786. We still have not broken below 205. 205 was the B low of the swing. We haven't taken out the high, nor have we taken out the B. Therefore, we traded inside this AB boundary. Now, looking at it a little closer up, we can see that the market has formed some large consolidation. We had a breakout to the south side, which indicated that we were possibly going to be breaking the low, the B low, and chasing after the objection point. The market did not continue below the low of 205, but came back inside the large consolidation. Now, we said in the beginning of last week, we said watch out for the retest of the top of the range. We said watch out for about 40, I think it was 748, and as you can see right now, it got to a high of 721 of this move, of this bullish rally right here. We have not reached the top of the range. It doesn't necessarily mean we are going to still continue to reach the top of the range, but we can see that we are certainly bullish in this retracement. Now, if you want to talk about trend, well, at the moment now, on the short term, we are bullish. We are bullish with the short term swings, but unfortunately, we're still sitting inside the down AB boundary of the intermediate swing, which is bearish. So the overview look of the medium term is bearish, although we are on short term bullish rallies right now, and until of course these lows right here at 556, which is 556, if that low gets taken out, then we could consider that we might be heading down south. We might need to pay attention to the lower time frames to see what the lower time frames in fact offer us. Now, if anything, it's going to come back down and retest the support area right here of the range, which is down here at 412. So keep an eye on, of course, taking out this low at 55. Sorry, I keep saying 55. I mean 556. If we break that price point right there, we'll certainly be dipping down towards around this price point at 412. So 412 as we retest these old highs and the bottom of the range. Moving on to the Aussie dollar, let's go to the 240 time frame. The Aussie dollar is bullish overall, although the retracement continues to move down south. So we're still not moving out of the retracement. We have not moved into extension yet. We're still inside retracement, and of course, market finding support in a lot of areas. You can see as I compress the charts, there was consolidation. We're now breaking below that consolidation area, which is great for some traders that are still short with the Aussie dollar. Of course, you'll be looking at the swings going down south, and at the moment now it's testing that old support become resistance, which is key factors for traders that are selling off resistance. You'll be looking for those areas right there at right there at 89.16. So bearish on the short-term swings on the Aussie dollar. Although we're still in a bullish upswing, we're still placed inside that retracement. We have not moved out of retracement on the Aussie. Let's go to the Canadian. I meant the JPY. JPY is looking bullish. It is an up AB swing on the medium-term outlook, but don't get confused. Of course, the short-term outlook looks a little bit different. We are still in retracement. Therefore, in the short-term outlook, we are looking bearish. Now, the market has started pulling back. We still have not taken out the high yet, 91.87. Until that's taken out, we're still bearish on the short-term swings. Okay, so still bearish on the short-term, but overall, we're bullish on the upswing of this intermediate swing. Now, moving on to the next currency pair, which I think it is the Swiss franc, and moving on to the Swiss franc. We actually, in fact, have spoken about the Swiss franc, but let me go back to the Swiss franc. We can see we are bullish on the Swiss franc, showing that the market has broken through resistance, once again, finding support off the old resistance, and coming back to about 382 bounce right now. We're just short of these highs right here. They will be acting as support, and traders will be looking for opportunities to start buying off support areas. Alright, traders, that pretty much wraps it up for this review. I trust that the information discussed in the session helps you become a better trader and helps you make more or better informed decisions in this market. This is the FX Big Dog wishing you joy, peace, and successful trading. Thank you, traders.